Good morning, everyone. Thank you for joining us for today's webinar, 2013 Tax Update for Tax-Exempt Organizations. My name is Danette Scheip, and I'll be your moderator for this webinar. Before we get started with our speakers, I'd like to go through a couple of housekeeping items. First, we encourage you to ask questions throughout the presentation. You'll see a webinar pane that you can use to enter your questions. Just click the red button to send the question to our presenters. They will answer the questions as time allows at the end of the presentation. Secondly, we want to make sure that you have excellent audio quality, so please select the appropriate setting. If you're using a telephone, please click on the Use Telephone Audio mode, or if you're listening through your computer, then please click on the Use Mic and Speakers option. Let's review the requirements for those of you who are interested in CE for your participation in this webinar. To qualify for a California CE, you must use a personal computer, no PDAs, and log in with your own information and unique URL. You must be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar. You must actively respond to at least 75% of the polling questions, and you must complete the evaluation survey at the end of the webinar. Now let's meet our presenters. Lynn Henley is a tax partner at Armanino. During her 18 years of experience in public accounting, Lynn has provided consulting and compliance services to a variety of tax-exempt organizations, including public charities, private foundations, supporting organizations, social welfare organizations, labor unions, social clubs, and business leagues. Next, we have Barbara Cyphers. Barbara is a partner for 15 years, works in the firm's nonprofit tax niche group, and also serves closely held businesses. Her recent presentations include the topics about FIN 48, unrelated business income, and related planning, the new Form 990, and compensation considerations. We also have Tammy Sugahara, who specializes in the preparation and the DeYoung Museum, Oakland Museum, San Francisco Goodwill, and San Francisco SPCA. Tammy chairs the Cal CPA nonprofit interest group of the East Bay Committee. I'll now turn it over to Barbara, who will review the presentation overview.
Great, Danette. Thank you. Welcome. Welcome to our annual Nonprofit Tax Update webinar. The screen that you're looking at right now summarizes what we'd like to accomplish today. We will be going over the 990 changes and clarifications. Lynn, we'll look forward to Lynn's presentation on recent rulings and case law that can affect your organization. I'll be talking about the exempt group's 2012 annual report, kind of a hot topic right now, right? And then Tammy will go over her list of common errors that we encounter and want you to avoid making. I'll spend some time giving a brief overview of the employer mandate part of the Affordable Care Act. And then Lynn will wrap up giving you some tips on functional expense allocation trends that we're seeing, followed by questions at the end. And as far as our, again, learning objectives, this is what we hope that you take away with you, that you'll have an understanding as to what has transpired in the last year in the arena that affects your organization. So our next, our first section, Tammy's going to let us know what is happening with respect to the so-called new 990 form.
Thanks, Barbara. So what's new on the 990 form? So really the 990 form isn't new any longer, but we continue to see changes and clarifications. And we like to point out certain changes made to the form since our tax webinar last year. But first, let's review what forms are required to be filed. The Form 990N, or the e-postcard, is for filers with gross receipts of $50,000 or less. The Form 990EZ is if gross receipts are less than $200,000 and total assets are less than $500,000. The full Form 990 is for gross receipts of $200,000 or more or total assets of $500,000 or more. As a general rule, you should make sure to include value of in-kind contributions other than donated services or use of property when estimating your gross receipts for the purpose of determining what form your organization will need to plan to file. Also, it's always good to look